The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Wednesday morning, and we got about 24 minutes to go until the start of trading, and you got markets basically a bit higher. But boy, you look at this chart, folks, the decimation yesterday, even the sell-off that we had from about 1:30 in the afternoon, you zoom in on the action on the S&P, we dropped dramatically at 8:30 on the CPI number, and that was just the beginning of the pain, folks. We are 100 S&P points below where we were at after the report came out, and the S&Ps had already dropped 100 points, right? It seemed like it was a startling number. Very tough to imagine the market catching a bid yesterday and people buying the dip on that number with the implications it had, and that's what happened, man. You sold off right into the close at about 39.50. So yes, you see all markets in the green across the board. But folks, you're talking about giving back maybe the last 15 to 30 minutes of action of yesterday as markets chop around near lows right now at 39.64. We got PPI data out this morning. You could say that's a little bit hot as well, at least on the core side. We'll jump into that in a moment. NASDAQ 100, you talk about a day to the downside, man. We're 800 points off of where we were trading at yesterday. 800 points, man. NASDAQ was approaching 13,000. This morning, you're up by 54 points. But again, just kind of chopping around where we were as of the close last night. Dow's up 70 points. So much for pushing 33,000. We're pushing 31,000 today. Remarkable. You're talking about 1,500 points below where we were at yesterday before CPI data. Russell gives up almost 100 points, folks. Bananas. Bitcoin, very volatile, of course. You go from about 23,000. We're chopping around at 20,355. I mean, everything going on here, okay, even crude. Now, crude, you had a pullback yesterday as well, 89.31. We were pushing $90 this morning. We're catching a bid yet again. We talked to our man Teddy Kegstat at 40 past the hour today. We'll talk to him about some currencies. We'll jump to those in a moment. We always talk a little bit of crude as well. Gold contract, man, you had a strong dollar yesterday on higher yields in the U.S. Dollar strength hurting gold. Gold crashes from 1740. Now, here's the interesting part about gold, though. Gold crashes from 1740 down to and makes a low at 9 o'clock, okay? And you chop around since then. You go to the dollar index, you jump around, DXY, and you had a spike at 8:30, okay? Now, the dollar index is right to where you were again at 8:30, so the markets really took some time here, but the currencies did it all at once almost, right? Yeah, the dollar index do it all at once. Gold contract moved to where it moved to within about 30 minutes, and that's where it stayed so far. Now, not so much the case with yields, but close. The 10-year, okay, you're right back to where you were at 9 a.m. yesterday. All right, so markets kind of catching up with currencies and yields, in my opinion, in terms of the move that we had. The markets all day yesterday were just trading lower in pretty dramatic fashion. You got the 10-year right now pushing 3.5% again, 3.43%. The yield on the 10-year. I think I heard the 2-year's at like 3.8% this morning. Just wild stuff. And I do have the 2-year on here too, I think. Let me see if I have it. Where am I? Think that's the 2-year? Yes, it is. That's the 2-year. Down another 2 ticks right now at 103.16. You put this thing on a daily. Talk about lower prices, man. Breaking below the lows we had at June 13th, the 2-year. That's a daily. That's a weekly, man. You talk about max pain on the 2-year. All right, we jump over to the VIX. You want to talk about some volatility. Now, here's the thing about the VIX, okay? We're still not at exacerbated levels in the VIX, man. You look at just where we've been this year alone, okay? If you want a max pain situation, we're not even close, folks. Every time we've had some deep pullbacks in this market, the VIX has approached 35 to almost 40, and that's just this year. We're not talking about pandemic VIX spiking to 80, okay? We're talking about this year as the market has retraced on fears of Fed hiking, on fears of economic slowdown. You're seeing a VIX that's elevated, but again, that is quite a green bar, okay? But check out the last time we had some green bars that look like that, man. There's a green bar that looks like it on April 22nd, and what do? You finished at about 28, and the pain wasn't over until you chopped around near almost 34 on the VIX. Okay? Every time we've had rises, folks, 26 to 27, that's not really usually where the volatility peaks out, especially if we have a deep pullback. Not sure what saves this market right now from wanting to bid. Do you want to bid right now? Are you a buy in the dip type of trader right now as we come into a Fed meeting next week and now the conversation has shifted to 75 to a point? Tough stuff, folks. All right, let's jump over to the PPI numbers out at 8:30. So, fell for a second month in August as fuel costs continued to retreat. Okay, so that is the headline. When you look at the headline number, though, an underlying measure of wholesale costs firmed in a sign of persistent inflation in the production pipeline. So PPI decreased 0.1% from a month earlier, still up 8.7% from a year ago, folks, okay? Excluding food and energy, the core PPI climbed larger than forecast 0.4%, 7.3% from a year earlier. The market was looking for 0.3% on the core. So you come in at 0.4, they were looking for 0.3. Not really a relief from what you saw yesterday. And yesterday, so startling that I don't think anything in this report is going to save that, man, at all. Yeah, and a lot of conversation about rents today, right? So this report today, goods prices fell 1.2% as gasoline prices continue to fall. Food prices were unchanged from the prior month, excluding food and energy. The index of goods cost rose 0.2% for the second month. Service prices increased 0.4%, the most in 3 months. 40% of the gain was due to higher margins for fuel retailers. Okay, so there's a lot going on in the PPI data. A lot of talk of rent today, man. I talked about it on Monday. We got some big numbers yesterday. Food is a big number as well. I mean, you see it at the grocery store, folks. They can't tell you that's not happening in a big way. But, boy, you look at rent prices right now, and the debate goes, right? Which one wins out? As in, if the Fed is going to hike, rent is a big problem going on right now, folks, okay? And rent, shelter, almost 1/3 of the CPI, almost 40% of the core number for the CPI. So what happens? The Fed hikes. By the Fed hiking, that is going to increase the interest rates people got to pay for mortgages. You increase the rate they got to pay for mortgages. What does that do? It gives them less buying power, okay, for the same monthly payment so they can afford less of a house. Now, in theory, what should that do? That should bring down the value of property. And if you bring down that value of property, the rent that people are paying for that property should decrease in kind. But that's not exactly how things are going to play out when nobody has a house, folks. People need somewhere to live. And just because you can't buy a house anymore, if you still need somewhere to live, that demand's going to be there. So what you're almost doing is by reducing the buying power of a mortgage. Okay, now I don't know which side's going to win out. There's two sides, you know. Give us a call, folks, 877-927-6648, because this is an interesting conversation, right? If you hike rates, that brings the buying power down of most consumers because they're paying a monthly payment based on that interest rate. That makes it more difficult for them to buy a house. In theory, the value of that house should come down and the rent that people pay for that house should come down. But what happens if you can't buy a house because your buying power just almost got cut in half from last year? So what do? You have to rent. So maybe rents are going to get dislocated they already are, probably in some cities, especially from the actual underlying value of that house. Not sure interest rates are going to, relieve the rental problems. And if that's the case, folks, core CPI, watch out. We're coming back with Kevin Hincks from TD Ameritrade Network.
Vista Gold owns and operates the largest undeveloped gold project in Australia, the Mount Todd Gold Project. Vista Gold just completed their feasibility study, resulting in a 7 million ounce gold reserve. Vista Gold has all major permits approved and has retained CIBC capital market assistance in evaluating alternatives and in completing an accretive transaction. Vista Gold trades on the NYSE American and TSX under the ticker symbol VGZ. Vista Gold, executing a strategy to create shareholder value.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched The Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. We got the S&P futures up by 11 right now. Dow futures up by 53. Let's jump over to our man Kevin Hincks. Every trading day, folks, 12 noon Eastern time, right here on Tiger TV, the TD Ameritrade Network Fast Market, with your host Kevin Hincks, Tom White, the team at TD Ameritrade Network. They break down the day's market action, folks. They got some great guests on the program. They walk you through hypothetical trades. You're talking about options. You're talking about defined risk in a market where we got 4 to 5% swings on a daily move right now. Kevin Hincks, good morning.
Good morning, Tommy O'Brien. Yeah, a little bit of relief this morning, but I wouldn't take too much comfort in the pre-market futures, as I expect the bumpy trade to continue today, Tommy. We got our PPI data, mostly in line, a little bit high again on the core, a little bit higher than expected. All things considered, remember, the 4 looks we get in a month, Tommy, at inflation, the wages data in non-farm payrolls, CPI, the PCE data in personal income and outlays, and then PPI. PPI is a distant fourth in terms of looking at overall inflation because it doesn't always show up in the next data. So I wouldn't expect much of a market reaction for out of PPI, Tommy. I think it's important to look at, but I wouldn't. I still think there'll be a continuation of the narrative from yesterday about overall inflation and what the Fed plans to do next week. And we wait, I guess, Tommy, nowadays, we wait for the Wall Street Journal article to come out and tip off what they're going to do.
Pretty interesting times we live in, man, and I agree. It's kind of green across the board right now. My Thinkorswim platform, man, you got all the futures up with the Dow, NASDAQ 100, S&P, and Russell. But boy, you're talking about basically just gaining back the last 7 minutes of trading yesterday, maybe. I'm kind of exaggerating, but I agree, man. Those numbers on the CPI yesterday, we talked about it yesterday. And I said this morning, Kevin, who's buying right now, man? And I'm exaggerating a bit, of course, but at almost 4,000 in the S&P right now, we're just back to where you were last Thursday, Kevin. And I said, if last Thursday, I think you even said, hey, guess what? Here's what we're going to find out come Tuesday morning. We're trading right now at 39.61. Where do you think the market's going to be? And if you said it's going to be at 39.61, I'd say, geez, that's pretty impressive, man, because those are some pretty scary numbers. We traded dramatically higher 3 days into that number, and then you gave it all back. But yeah, who's buying right now in terms of just the volatility that we have coming for us? With that in mind, Kevin, we come to a Fed meeting next weekend. Does the market kind of just really, like you said, kind of just chop around, or is this thing going to potentially trade a little bit lower as we come into that Fed meeting? It seems like the market gets ahead of itself, right? Many times you've pointed out the actual meeting itself has been a reversal of the market action leading into it. Is that something you might be looking for as we come into this next meeting next week?
I would think, we still have some data to come out. We still have retail sales tomorrow and consumer sentiment on Friday. Remember that combination of CPI and consumer sentiment is what actually changed Jerome Powell's view last time during the quiet period. Remember, we're in the quiet period from the Fed, so you're not going to hear a lot of comments on what's going on right now. So I expect the markets to remain choppy and volatile, Tommy, into the meeting next week. Like I said, we've still got some data this week we're going to comb over, but I would expect some movement. Now, here's one thing. Yesterday's move was extreme, Tommy. So some people may think that if you're talking about inflation, and you can make a case based on PPI data that some of the highest inflation levels is in, if you expect some of these numbers at the producer level to flow into the consumer, you can still make a case for peak inflation. Now, stubborn, sticky inflation, that's another story, Tommy. So, there's still a lot of speculation going on in this market, Tommy. I think today's going to be bumpy. You could have margin calls on a day, on a big move like yesterday. I would expect some selling to come right after the open, but after that, we'll see. This market will show its true hand. Did yesterday go too far? This market tends to do that, Tommy. It doesn't like to react. It likes to overreact. So let's see if we get any type of relief today. I think how we finish the day will be pretty important.
It's pretty interesting, man. We got volatility everywhere. The VIX still sitting at 26.91 in more, and I don't like the term normal times, but in more normal times, 27 is pretty elevated. But if you look at it compared to just where I got a daily chart on the Thinkorswim platform, comparing it to the spikes we've had this year, those spikes are in the 35, 36, 37, 38 almost range, and VIX sitting at 26.91 right now. With that in mind, Kevin, everything going on, what are you guys talking about on Fast Market at 12 today?
We'll still take a hard look today at the U.S. consumer. Well, on our first segment, we'll look at Walmart and what's going on with that consumer staple stock. And the second section, we'll look at AutoNation. We'll take a look at, remember, the one part of the CPI data that was down was used cars and trucks, AutoNation, a used car seller. And then we'll look at more, and that is your home, your biggest investment. We'll look at Home Depot. So Walmart, AutoNation, and Home Depot today.
Pretty cool, yeah. And it's there's just so many variables right now. There usually are. The consumer, you could say, is pretty strong with everything lining up right now. But boy, are they going to stay strong as we come into these hiking cycles and the whole deal with housing, man. Home Depot, housing, we talked about it a bit, talking about rent, mortgage rates. I think I saw over 6% today. Just a dynamic situation changing every day. Well, Kevin, we appreciate the time you take with us, man. We appreciate the education as always, and we'll be watching Fast Market at 12 o'clock today. You have a great one, man.
Thanks for having me on, Tommy.
Always a pleasure. Folks, check it out every trading day. And boy, this is probably a great week to check it out because they deal with volatility, they deal with premiums, and we got some volatility and we got some premiums in this market right now. Whether you trade options or not, understanding how they work, folks, provides you tremendous insight, even if you're trading just equities. Let's jump around to some of the FANG stocks as we come into the opening bell. Quite a haircut for Amazon yesterday. All the headlines I saw was Bezos lost something like $11 billion. He'll be okay. But quite a haircut for some of those tech CEOs and founders. Bezos, you trade from what? You gap lower on the open. There's your 15-minute, but 137 down to 127, $10, pretty crazy. Apple shares this morning. There's a give back for you. So it's simple math, folks. Apple's got about 16 billion shares outstanding. They traded down $10. They just gave back $160 billion in market cap by themselves, right? Apple alone, $160 billion. How many companies are even worth $160 billion? Not that money, and Apple gives it all back. But, as I mentioned, it's not that dire, folks. For people that are screaming, hey, this is a dire situation, look at the demise in this market. Folks, Apple's just back to where we were trading at Thursday. Okay, if this is really a startling CPI print that's going to change the dynamic of how persistent, and to use Kevin's word, how stubborn inflation is going to be, does Apple really need to be where we're at on Thursday? I don't know. I don't know if that's the case. And I say it a bit tongue-in-cheek, but you'd probably make the case that on Thursday, if you told everybody where we were going to be for the CPI data, that the market probably would have no business trading where we were trading at on Thursday. And meanwhile, that's kind of where we're sitting across the board right now. So do not be surprised, folks. I talked about it yesterday, right? What if I told you in early May, and I'm looking at the S&P right now, right? And I said 4 months from now in September, okay, we're going to be pushing CPI data that's still running hot. We're going to be pushing core data that's still running hot, much hotter than expected. Food data, much hotter than expected. Rents are going to lag. Okay, if I told you September data was lining up like that, and I told you, but don't worry, market's going to be right where it is right now, I'd say maybe it doesn't deserve to be at 4,000. We're going to find out today. Stay tuned, folks. We'll be right back.
Of booming inflation, where your purchasing power is eroded, there's no better place to protect your hard-earned money than in gold. Vista Gold's flagship asset is the Mount Todd Gold Project in the Northern Territory of Australia. This is Australia's largest undeveloped gold project. We are talking a world-class gold project in a Tier 1 mining district. This is a large-scale, low-cost project with significant existing infrastructure in a politically safe and friendly mining jurisdiction. Vista Gold just completed the Mount Todd feasibility study, which resulted in a 7 million ounce gold reserve and a 16-year mine life. All of this, combined with the approvals of all major operational as well as environmental permits. This distinguishes Mount Todd as an attractive, de-risk partner, ready development stage gold project. Vista Gold trades on the New York Stock Exchange under the symbol VGZ.
TFNN is excited about our new software charting program, The Art of Timing the Trade Chart. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open, and we've held up for the first 30 seconds of trading at least, with the S&Ps positive by 11 points, NASDAQ 100 positive by 44, Dow positive by 56. But as I mentioned, folks, not to say don't be fooled, right? But we got green across the board right now. It could be a little bit soothing to think that we got green across the board and the Max Payne situation has stopped for just now. But boy, we are just back to Thursday prices, folks. And if that was really a game changer, and it was, okay, and I know we just lost 1,600 points in the in the Dow, 1,500 points in the Dow. You know, you just lost, 200 points in the S&P. But we gained 200 points from Thursday to Tuesday. And what did we gain 200 points on from Thursday to Tuesday? Okay? I mean, please join the conversation, folks. 877-927-6648. What did we gain those 200 points on that we just gave back? Because we gave it back for obvious reasons to do with the CPI. Why did we gain them? Okay, because you could make the case that we had no business gaining those 200 points. Okay, now the market traded lower from 4,300 down to 3,900. You could say that that was anticipation of potentially a miss on the CPI. But you got to take things in context, folks. And inflation is being much more stubborn than everybody has been thinking. So you have to open up your mind to the concept that that could continue, because it's continued way past when people thought it would. So what's to say it won't continue for the next 12 or 18 months? If that happens, man, the Fed's in a real tough spot, and they might put us in a tough spot to clamp down on those inflation numbers. I talked about interest rates, mortgages, right? Mortgage demand declines 29% is the headline since last year. But how about the rate rising to above 6%, 6.01? But it counts, folks. The average contract interest rate for 30-year fixed mortgages, conforming loan balances, that's about $650,000 or less, increased to 6.01% from 5.94%. And this is probably going up, right? Because it's up to 6.01%. But you're talking about the numbers just keep rising right now, okay? That is the highest since 2008. It hit 6% for the first time since 2008, okay? It doubles what it was at basically a year ago. Refinance demand falling another 4% for the week, 83% lower than the same week a year ago. I mean, who's refinancing right now, right? Maybe you got to pull capital out of your house if you have to, okay? It's not the end of the world, folks. This will come back to some form of normalcy. We're going to have to go through some pain potentially, and that's not good, okay? But we're not going to be stuck with this forever. The Fed, they're on course. And that's what the market's freaked out about a bit, that they are on course. And the chairman seems pretty confident that they're going to get that inflation under control. And they're going to push those inflation hikes, there's the interest rate hike, until they're sure that they've kind of gotten over that peak, okay? And we're not even close to that. You could say that numbers are rising. And they're looking for, 2, 3, 4 numbers, something that really shows them that the trend is their friend and that the inflation is under control. You almost have to completely reset that. We now have no good numbers, right? So that if we get one report showing a tame CPI, well, great, that's one report. We don't have many. They need many to really give them some type of confidence that they've achieved their objections, and they are not even close to it, man. So with rates above 6%, only about 452,000 borrowers could benefit from a refinance. I'm actually shocked it's that high. What are you doing for those people that are still in a 6% mortgage right now? 452. I mean, even if you have a small amount of debt in there, probably would have made sense to refinance. These few remaining candidates could only save about $315 per month. There are people out there, almost 500,000 of them, that even right now they're paying so much money for their mortgage that they could still save $315 per month. I mean, that's another way to say what they're talking about there. You see the types of decisions, unfortunately, people make with their finances, folks. I don't know the exact scenarios of everybody in there, but what are those people doing with some of them probably just want to pay off their mortgage, right? They don't want to refinance. They don't want to add any of that closing costs, whatever it is. But they're saving $300 a month right now. Why weren't they refinancing a year ago, right? What was going on? Hey, everyone has their situations. I'm sure there's many of them. But that's a low number compared to the amount of mortgages out there, but it's still 452,000 people, man, that are in a mortgage that if they had refinanced, and even right now could save $315 a month. But anyway, mortgage applications to purchase a home squeezed out again to 0.2% from the previous week. But there's your headline number, 29% lower than the same week a year ago. The spread between the 30-year fixed mortgage rate and both ARM and jumbo loans remained wide at 118 and 45 basis points. The wide spread underscores the volatility in capital markets due to uncertainty over the Fed's next policy. We got rate moves all over the place, man. Yeah, and we're going to get 75. We might even get a full point, okay? Might even get a full point. And that is a week from today, folks. At 2:30 p.m., we get the press conference. 2 o'clock, you get the announcement for the Fed. Okay, jumping around to some of the hot takes on Wall Street. Bernstein quants say $7.6 trillion U.S. bear market has more to go. Markets vulnerable to a hawkish Fed, growth jitters. I mean, I really don't have to tell you this stuff, folks, right? But an analysis of the 15 major routes since 1937 shows peaks to trough price drops average 28%, deeper than the current drawdown of 20%. Okay? I mean, folks, things look dire because we went up so fast. We went up. I mean, the market went from what? 2,200 at the COVID depths up to 4,800. You went from pre-COVID 3,200 to 4,800. Okay? I mean, putting things in context, folks, as the markets give it back, you got the NASDAQ negative, you get the Russell negative, and you get the S&P barely up by 2 here. Okay? We're going to put this thing on a 5-year weekly. Okay? That's not what a disastrous bear market looks like, folks, okay? That's just what looks like when you give up, okay, about a 382 move of an acceleration. Yeah, that's all you did. You gave up the 382 in the S&P of the entire move higher from the COVID lows of 2174 to 4800. You came into COVID at 3300. You're trading at 3900, okay? And you could even make the case here, folks, that you came into the year 2019 at about 2600, 2500. And you're sitting at 4,000, okay? Now, you want to do it one more, because this is the one that I really, in my head, allows me to understand the context of where we are. Now, let's get, here is November of 2016, when President Trump was elected, okay? Do you remember how well the economy was doing, folks? Everybody, you know, and this is where people differ, okay, but they said President Trump was handed a super strong economy, okay? It was on its way up since the 2008 lows. Things were going so well. He didn't do it, right? Okay, now don't focus on that part because it gets political. But remember the feeling of the market sitting at 2,200 at that time and the economy doing fairly well, okay, and the sentiment around it. And now consider that here we are about 6 years later and the market is twice the price. And if this is your idea of max pain, I would just be careful with that analysis, okay? Because we had double the price of where you were when everybody thought things were really going well 6 years ago. On an annualized basis, you're pushing, you know, what? What is that? 14%? No, what is it? 16% a year almost? 17% a year over 6 years since that time? And let alone you go even back further, right? I mean, you're talking about, and this is why people felt so good, to put things in context. When you back it up, there's 2016. We felt good because we were at 2,200 on a straight run from the lows of 665. All right, folks, we're going to jump around a bit. When we come back, we'll be talking to our man Teddy Kegstad. We'll talk some Forex on a big week for that dollar. Stay tuned, folks. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We get S&P futures up by 4 points right now. You got the NASDAQ 100 barely in the green. Let's jump over to our man, Teddy Kegstad. Folks, you can reach Teddy's service every day when you want to sign up right under the newsletter tab, folks. The Tiger Forex Report, check it out. It comes with a 30-day money-back guarantee. Teddy puts out an outstanding weekly report on Mondays, updates that follow throughout the week when warranted, and it is a great time to keep track of the Forex market. That's enough said, folks. Teddy Kegstad, good morning.
Good morning, Tommy. What a crazy 24 hours it's been, huh?
We live in interesting times, Teddy, man. We say it all the time, but yeah, not often do you see, what was it? I mean, geez, you're talking about 1,500 points in the Dow, the NASDAQ 100 giving up almost 1,000 points, just crazy numbers, let alone in currencies, man. Dollar index, where do you want to start things off today as you go around?
Well, I think the reaction to the CPI number is something we should talk about. You know,
Please.
I've been saying how the economic numbers are going to be such a important thing as far as direction and making, decisions in the marketplace. And, we've been talking about inflation now, obviously, for months. And I think this number is very important. It's showing that, when the CPI came out last month, everyone was saying, hey, inflation is cooling down and blah, blah, blah. It's like, no, it's just laying off the gas a little bit, and even now we're looking at it, well, maybe it has in certain sectors, but we see in other sectors, it really hasn't, I think a lot of it's also price gouging. Companies need to make their margins or make up their losses from what they've gone through over the past couple of years. And it's really hitting the economy, and I think that's why when the CPI came out the way it did, the stock market really got hit the way it did because earnings are becoming an issue, So I think that's something that's going to affect all of the markets, and we're really going to see a lot more volatility based off of these things moving forward.
Yeah, it's amazing trying to just figure out where we go when so much of the analysis has been so wrong. I mean, what was it? Was it March when they said we probably peaked? And maybe that was the super headline number. We had some crazy things going on with crude during those months, of course, which pushed those headline numbers to some pretty stratospheric levels. But yeah, here we are in September, right? And we're getting numbers that are actually accelerating, and on the core side, they really are, man. And a lot of conversations I was talking about earlier, we got mortgage rates above 6%. How's anybody going to buy a house right now at 6%? And then are they going to be in rent? The rent is going to lag, and that's going to have a dramatic effect for years to come. Very difficult in my head to wrap my head around, and I'm just throwing in my analysis that agrees with a lot of what you're saying, but it's just something I've been thinking about a lot, because if that's such a big factor, let alone everything else, and that's its own can of worms, right? As in, I don't even know what happens there for food and everything you're saying, man. Because, listen, folks, CEOs, okay, it's not their responsibility to tame inflation, right? They have a business. They have employees. You have to do what you have to do in that business. Now, there is gouging going on in certain areas, I'm sure. But to some degree, they're dealing with rising, whether it's human capital costs, right? Whether it's cost of goods, whatever they're doing, they have to survive, and the problems they're dealing with are forcing them to raise prices. And if people are going to pay it, and that's going to allow them to succeed as a business, that's how things work, man. So that's its own can of worms. But then you add in the mortgage rate and how rent is just going to factor. I don't see how numbers come down to 2% in the next couple of years, man. Maybe we get close. That's almost the best case scenario. But it's a tough one right now, and we're seeing it in those numbers. Right. So you jump from that, Teddy, and then you jump, obviously, huge moves in the dollar index, right? Huge moves in yields. We had some action in crude as well, still holding up pretty well this morning for crude. Maybe we start with the dollar index. What's your take on the dollar index as we're pushing almost 110 again on that dollar index?
Well, you know what? I'm bullish the dollar index overall. You know, I mean, the numbers out of Europe and the UK are looking really abysmal, if you will, at best, you know. So, I mean, as far as the dollar index, I can't see how it's not going to remain strong, especially with the Fed coming up next week, you know. So, I mean, we know that the Fed is aggressively using this direction right now as far as raising rates. They're very hawkish. And now I think with this number, it just gives them more fuel to the fire to support their narrative. You know, whether it's right or wrong, well, that's a whole nother issue. But that's something you have to follow. And that as long as they are relentless in that on that path, then the dollar index is going to continue to rise. It's going to put a lot of pressure on the euro and also the pound and also on the yen. You know, I mean, there's nothing that would counterbalance that, you know, that right now, you know, I mean, especially oil, and maybe even if that sells off a lot, you're looking at these energy prices now in Europe, throughout the EU, and even in the UK, that's pretty much energy efficient or independent, you know, that are just insane. You know, I mean, the level of if Americans would be paying what they're paying right now in Germany and other countries in the EU for their electricity and their gas, we would have riots in the street. We would. I mean, seriously, who's going to spend $1,000 a month for their electricity for a one-bedroom apartment? You know, I mean, that's just ridiculous.
Even the conversation around price at the gas pumps, and you know, we get it, but it's staggering sometimes what other countries are paying, right? And for us, it's just not the norm. So I get it, because it impacts your bottom line, man, when you're paying those weeklies. But yeah, they have some serious issues. And crude, I mean, crude has helped the inflation narrative tremendously. I mean, there's a extreme risk, and I know I'm speaking to the choir here, man, but there's an extreme risk when you're chopping at 80 to 90 and we have inflation running super hot, that what happens if we chop back around between 100 and 110, which is not out of the realm, or even, you know, wherever it ends up, right? I mean, that's been very helpful over this period of time, and still we have such a big problem going on. Now, there's two factors. There's the slowdowns, you know, all that stuff that affects crude. But yeah, interesting where we go. How about the yen, if we could jump around? Because I know even today you got the yen moving with some action, even more so than the euro or the dollar. You're backing off. You were almost at like 145 I was looking at. Yeah, and now you're pushing 142.87, still pretty lofty levels. But what's your take on the yen?
Well, I think that these, you know, as we buffer these new highs, you know, you're going to see a nice corrective sell-offs. You know, I mean, I think what they're doing is they're squeezing out the week longs, people who are trying to jump in on a trend that's been going on for over a year. You know, so as we're bucking up against the highs on a top, you know, or what seems to be topping, I think that's why you're getting these little corrections to the downside. But I'm bullish overall. I mean, you have oil that is stabilized. But then, you know, we had a buy signal in oil that we put out in the report for this week. You know, I think that the low that was set last week in oil may be the low for the next couple of weeks. It's very likely that that's going to hold. There's nothing that really could, I mean, we got oil numbers coming out today. Maybe that changes everything, you know. So,
Sure.
but right now I think that overall that is still bullish. The dollar index for sure, because of the fundamentals with the interest rates, is very bullish. And that's going to drive these currencies. And the U.S. dollar yen, even the Bank of Japan came out again. They're staying dovish. They're not going to be hawkish. So remember, their narrative was they were going to defend their currency 3 months ago. They never did anything. And now their narrative is we're staying dovish. So whatever, that was just an idle threat, which back then when that came out, I remember having the conversation with you being like, I think you can count on them doing something, because the Japanese usually don't play games like this, So what's going on over there is a whole new dimension, but it's definitely, actions speak louder than words. Doing nothing is exactly what their action is. Doing nothing is still doing something, especially when it comes to the markets. And with that being said, we're going to be bullish to U.S. dollar yen.
I like it. Can you hang with us for the final 3 minutes? So I'm going to,
Sure.
if you can think about what I'd love to just chat about is, I don't think the horizon is near, but what are you looking for maybe if there is a change? All right, we'll just chat about that when we get back. Stay tuned, folks. We'll be right back for one more segment. Perfect.
TFNN has just launched their new trading room, the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. And now they are expanding their reach with the Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. In the Tiger's Den, you can look over the shoulders of Tom O'Brien and the other TFNN hosts while they analyze charts during their live Tiger TV programs, and join an interactive trading community with hundreds of members exchanging ideas. Interact with other tigers and tigresses as they share trading ideas, news analysis, and discuss the market action all trading day, even at night and on the weekends. The Tiger's Den at Discord is accessible on mobile or tablets as well, so it's always at your reach. To sign up today and become a part of this educational community of traders, just visit the front page of TFNN.com.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. We got the S&P right now up about 15 points, Dow up about 92. Markets holding up relatively well for the first 25 minutes of trading. We're talking to our man Teddy Kegstad, folks. Check out his newsletter under the newsletter tab, the Tiger Forex Report, out every Monday with a new issue and updates to follow. So, Teddy, I agree, man, that the trends are pretty well intact. It's tough to argue against that. For those looking for a potential shift of change in terms of when that comes, when maybe, you maybe see maybe for those in fixed income, right? You're talking about the yield, you're talking about the dollar. We might not be there now, but where does your mind go as you look for that? Are you looking for multiple CPI prints? Are you looking for a Fed indication? How are you thinking about if that change comes about, whether it's, 3, 6, 9, 12, 18 months down the road, whatever it is?
I would say that the only thing that's going to really change things right now would be a Fed change, where their stance has to really reverse gears. The only problem is if they start to lay off what they're doing, it totally tears apart their whole narrative of what they're doing is what's going to help cut inflation.
Sure.
So I think what you're going to see is we're going to continue to see CPI and PPI rise and continue to trend in this direction for the next 6 to 12 months easily, So, there is no reason to think that anything's going to turn this around right now. There's just not. Too many people are scrambling, too many businesses are collapsing, and now you have issues where, and this is something I've talked to a lot of people who deal with logistics and supply chains. Before you couldn't get anything because you couldn't get stuff wasn't being delivered. It was either stuck on one part of the world or whatever. Well, what people have started to do, just like in the beginning of the pandemic when people started hoarding toilet paper, people have been hoarding other things in the supply chain. So now when you have producers, for instance, for food and also in manufactured products, things they use for production, they've ordered more than they normally need because they couldn't get any. So they started to think, well, we need to order ahead because we have this business plan that we need to produce this amount of X whatever widget good it is, okay? Now you have too many people sitting on stuff they can't sell. That's another issue.
Lots of issues, man. Teddy, I appreciate you taking the time with us every week, man. Appreciate the insight, and we'll find out where we are next Wednesday, and that's Fed Day, man.
Ride the inflation wave, baby. It ain't going away.
Awesome, man.
That's
Have a great
trade.
one, Teddy. Folks, thanks for tuning in. Stay tuned.